Welcome back to G Tutorials. Today we are discussing tax implications for truck drivers in Canada. Truck drivers are the backbone of Canada's economy, moving goods across vast distances. But with this vital role comes unique financial responsibilities, especially when it comes to taxes. Understanding your taxes isn't just about following CRA rules, it's about keeping more of your hard-earned money. The tax system has special provisions for transport employees, letting you claim work-related expenses and reduce your taxable income. From meals on the road to logbooks, knowing what you can claim turns tax season into an opportunity. This guide will break down the key expenses, credits, and cross-border rules you need to know. Our goal: help you file accurately, maximize your refund, and make your hard work pay off. Let's get started on making tax time work for you. By the end, you'll be ready to take control of your finances. One of the biggest deductions for truck drivers is meals and lodging while away from home. If you're on the road for at least 12 consecutive hours, you can claim a flat rate per meal. No need to keep every receipt. For lodging, keep all receipts for hotels or motels during long-haul trips. Supplies like logbooks, maps, pens, and even work-required cell phone plans are also deductible. Just keep those receipts. Showers at truck stops? Those count too. To claim any of these, you need a signed T-2200 form from your employer, confirming you pay these costs and aren't reimbursed. Without the T-2200, the CRA won't allow your claims. Stay organized and ask for the form early each year. Every eligible expense reduces your taxable income. Smart claiming means more money in your pocket. Deductions lower your taxable income, but tax credits directly reduce your tax bill. The Canada Employment Amount is a key credit for work-related costs, automatically calculated on your return. Upgrading your skills? The Canada Training Credit helps cover eligible tuition and fees. Don't forget credits for donations, medical expenses, dependents, and pension contributions. These credits add up, so review your eligibility every year. Check your T4 for pension contributions. They lower your tax bill and help you save for retirement. Claiming all your credits ensures you don't leave money on the table. Cross-border drivers get a bigger break on meal claims. If you're a long-haul driver, regularly away for at least 24 hours and over 160 kilometers from home, you can claim 80% of meal costs in the US, compared to 50% for domestic trips. Use the simplified flat rate method, but track your US meals and convert costs to Canadian dollars. Keep a detailed logbook as proof of your travel days and hours. Local drivers can't claim meals or lodging, so know which rules apply to your routes. The right claims mean bigger deductions for international drivers. Understanding these distinctions ensures you maximize your benefits. Don't miss out on the enhanced meal claim if you qualify. File with confidence and accuracy. Good record keeping is your best defense if the CRA asks for proof. Use folders or a binder to organize receipts for meals, lodging, supplies, and your logbook. A signed T-2200 is essential for claiming expenses. Remember, meals, lodging, and supplies are your main deductions. Keep every receipt except for meals if you use the flat rate. Long-haul and cross-border drivers get extra benefits, so track your travel carefully. Explore all credits from employment to training and medical expenses. If you're unsure, consult a tax professional who knows transport rules. A little effort in record keeping and understanding the rules pays off at tax time. Your job is to drive. Let your records and knowledge drive your refund. Keep more of what you earn. Hope you find this video useful. Please don't forget to like, share, or subscribe. See you next time.